Forward, we're now joined by MS Money, partner GST at Deloitte India, Pratik Jain, who's partner at PwC as well. And we also have Mr. DP Nagendra Kumar, who is the former member of CBIC. Gentlemen, thanks very much for your time here. Mr. Money, let me start with you, actually, before I toss it to my colleague, Tim Z, to take this forward. Earlier in the week, when we spoke to you, you said some clarification was needed when it comes to the GST on corporate guarantees. It should not be retrospective in nature and so on and so forth. You've now heard from the finance minister. What is your key takeaway?
Okay, so I think the issue on corporate guarantees has been hanging fire for a very long time. And this is something, as I mentioned earlier, is something which has been picked up in most of the audits that we have seen. And therefore, a clarification which says that when the director of a company issues a guarantee, he is issuing that in his capacity as a director. And there is no fee that he or she is charging for that. And obviously, that needs to be taxed at a value of 0. So it's very good to see that happening. It's also good to see a presumptive value of 1% being attached. The worry that I have is, even though it is 1% of the guarantee value, which will now form the taxable value for GST purposes, in recent times, because India Inc. has been on an acquisition spree, we have seen guarantees of very large amounts which are being issued. So when you have a very large amount of corporate guarantee that gets issued, even a 1% of that turns out to be a very large amount on which an 18% is applied. I also think that sometime in future, we will need to see some provisions where the GST paid on corporate guarantees, if it is not available as an ITC, or if only partial ITC is allowed on that, because the recipient is an NBFC or anyone else, in those cases, we need to have some kind of a provision which says that those are the cases where there will not be a notional value attached to a corporate guarantee. But overall, the issue on corporate guarantees being resolved and having some kind of clarity will certainly benefit the taxpayer and business. It will also benefit the GST audit authorities, who have not been very clear in terms of how to go about taxing corporate guarantees.
Well, Mani, I'll take this forward now. As you mentioned that there are still certain loopholes that need to be ironed out. Coming to you, Pratik Jain now, what do you make out of this entire proposal on corporate guarantee and personal guarantee? How do you see this move? I'm told that there were certain pending cases also on this regard, and this clarity could actually ease those notices which have been sent to companies.
Yes, I mean, as Mani pointed out on the personal guarantee, I think clarification is, of course, welcome. To say that director is not charging anything, there's no GST. And if they're charging anything for the guarantee, then GST shall apply. I'm a bit concerned on corporate guarantee. I mean, I'm not sure how this 1% value has been arrived at. Because in some cases, actually, the large infrastructure companies would pay a much lesser percentage, arguably, to banks for a similar guarantee. Let's say I could pay 0.25 or 0.5. And in the past, a few companies might have actually done an independent assessment and paid on a lower value. So if it is clarified that 1% will be prospective and it will not be taken as a benchmark for the past period, it's still okay. But if 1% is then used by the authorities for the past periods as well, then it will lead to more litigation, I'm afraid, right? But prospectively, at least it gives a benchmark to the industry and to pay at 1%. As I pointed out earlier, in most cases, this GST will become a cost for the industry because these kind of guarantees are issued in large projects, infrastructure, power, and so on, where the ability for the recipient to take input credit is usually not there because power, let's say, is exempt from GST. And therefore, if the council clarifies that 1% is prospective for the past period, will not apply 1% as a threshold, then it's good. Otherwise, it will lead to more disputes for the past period.
Coming to you, Mr. Nagendra Kumar, as both Pratik and Mani mentioned that there are certain clarities that are required. I wanted to know first why this proposal has actually come up in the council, because what I am given to understand that already there was certain clarity on this which was existing in the circulars earlier, in the law earlier, and now law committee taking this proposal forward again. What was the need to come up with this proposal on corporate guarantee and personal guarantee? And as Pratik and Mani are questioning, why 1% where in cases there could be a much lesser amount that can be paid?
Thank you, Tim.
Since you're former GST member at CBIC, yeah, why this proposal has come up now?
Yeah, Timsi, thank you. In fact, insofar as the taxability of the transaction is concerned, I think we need to keep it in mind one aspect in GST that any activity provided which has got an economic value could be treated as a transaction that could be deemed to be a supply. But more importantly, since a transaction happening between the related parties could be a deemed supply in terms of the Schedule 1, I think a view has been taken that this is a service, and if it is provided among the related parties, whether it is a holding company, subsidiary company, or associate company, it could be a supply without it. Consideration could also be a supply. Therefore, I think so far as the taxability is concerned, I think the view taken, according to me, I think it falls within the ambit of the GST law, which defines supply to mean a transaction. It is used in the course of furtherance of business. And of course, in so far as those transactions which do not have a consideration, but if they are deemed to have a taxable supply in terms of Schedule 1, it will get attracted. Coming to the second aspect with regard to valuation, I do agree with Mr. Mani and Pratik as to what they have said about what is the rationale for arriving at a 1% on a prescriptive basis rather than look at the actual basis. But the challenge would be, I think, in so far as the transactions in real world are concerned, a bank may or may not charge interest in certain cases of a guarantee provided. Depending on the KYC and also the credibility of the customer, probably sometimes it could be waived. It could be anywhere ranging between 0.5% to 3%. So I think in order to make the entire process easy to administer, I think the thinking is that introduce a value which could be deemed as a value for the purpose of levying GST. And let us also not forget this thing that in terms of Section 15, the government has got the power to prescribe a value in certain situations, what we have looked at in terms of the tariff value and other provisions. So the power to fix a certain amount as a deemed value legally valid, and the rationale as to why 1% of the bank guarantee, 1% of the guaranteed amount, the fact of the matter is that it has been ranging from 0.5% to 3%, and in some cases it could be waived. Therefore, it has been taken. And I do agree that Pratik's view is very correct that it has to be prospective in order to bring certainty and clarity and avoid litigation.
So you feel that the circular that the government is going to bring in should actually lay out clearly that this levy will be prospective, especially when it comes to valuation. There should be a clarity, maybe a case study or something is given, because of late we've seen a lot of circulars are coming in FAQ format where there are clear instructions given that if this is the scenario, what should be the taxability? If there's a scenario where the valuation is not there, how should it be considered? So that is something that the GST Council or CBIC, once they draft the circulars, clarificatory circulars, is something that the industry would keenly watch out for. Let me come to Mani, and this time it is on ENA. As we heard that ENA is also something that a lot of clarity is coming in to reduce litigation. That was the entire idea to discuss this proposal today in the council. Mani, reduction on taxes on molasses to 5% from 28%. How is it going to impact the industry? And yes, what sort of a clarity does it bring in for the liquor industry?
So I think as far as the ENA and the molasses related decisions are concerned, I think there are three decisions that have been taken. The first point over here is that the fact that the center has ceded the right to tax ENA in the context of the alcohol-related businesses, which are in any case outside the purview of GST, to the states, despite the Allahabad High Court decision, to me speaks very highly of the principle of cooperative federalism that we have been seeing in GST for quite some time. There have been a lot of discussions, even in the past GST Council meetings, on various contentious issues. But over a period of time, we have really seen GST Council as becoming a very good forum for states and center to sit and discuss their fiscal issues in the context of an indirect taxation. Now, this decision again reaffirms that cooperative federalism principle, where the center has handed over the right to the states, which is the right thing to do, because in any case, taxation of alcoholic beverages is outside the purview of GST itself. Unlike petroleum, it's not an issue which is within the GST coverage where a decision has not been taken to extend it. This is completely outside the scope of the GST coverage. And it is a state's prerogative to tax alcoholic beverages. So in that light, if the decision to tax ENA is left entirely to states, it's excellent decision. I would just pause for a minute over there and say that it would have been good if some principles had been given to the states on how to tax ENA. Because what this will lead to is each state having varying rates, vastly different as we have seen in the past. And that will lead to its own issues in respect for the ENA manufacturers. Because the ENA manufacturers will be levying ENA at a particular rate in a particular state. Now, the same manufacturer in a different state will have to levy the tax at a different rate. And therefore, for the alcoholic beverage manufacturers, they again are subject to a situation where one of their key raw materials attracts various rates of VAT in various states. So if there were some guidelines which the center and states could have agreed in terms of saying, look, these are the benchmark rates, have the rates from this till this based on these principles, that would have been very, very, good. As far as molasses is concerned and ENA for industrial use is concerned, I think this is something which was awaited for a very long time. And I'm glad that they have taken a decision on that today.
Hang on, Mani. We'll be back on this topic. Let's take a short break right now. We'll continue this discussion on the other side of the break. Yes, ENA is a crucial topic over there. Well, joining me back on the show are MS Money partner GST at Deloitte India, Pratik Jain, partner at PwC, and DP Nagendra Kumar, who is the former member of CBIC. Just concluding that discussion first on ENA, as Mani mentioned that probably there could have been guidelines for each and every state so that gives a clarity on the taxation of alcohols. But Mani, coming back to you on that, how is that possible? Because to be fair, alcohol is outside the GST's ambit. and it is only the raw material, that is molasses, which is covered under GST, and that is where the government has decided to reduce the rates. How would these guidelines be actually handy? Because it is up to the state. Any state can levy any amount of taxation on alcohol. That impacts their revenues, and that's how it is kept outside the GST.
That's a very valid point that you're making, Timsi. But what I mentioned was if there could be some guidelines which need not be definitive. Because look, the fact that ENA was discussed in the GST Council meeting and the fact that we have a decision which permits the center to levy a tax on ENA indicates that the central government has got some role to play and some decisions to take. So I'm not in any way suggesting that the center steps into the shoes of the states or takes over their powers and suggests rates, not at all. But if there could be some guidelines in terms of prescribing some floor rates on both ends, if there could be some guidelines in terms of prescribing what could be the variation in respect of the rates, a band could be set. I'm saying this more from the perspective of the ENA manufacturers who will now be grappling with various rates across states. Also, ENA being one of the key raw materials in respect of the alcoholic beverage industry, a uniform rate benefits the entire industry, even the manufacturers of alcoholic beverages. It benefits everyone. And the alcoholic beverage manufacturers are free to set whatever rates they want. The states can set whatever rates they want in respect of the output, which means in supply of the alcoholic beverages. But in respect of a key input like ENA, it would be nice if there could be a band that could get discussed between the center and the states consider that band.
Coming to you, Pratik, on this ENA issue, as Mani is mentioning, maybe some guidelines could have been issued which brings in parity for the industry so that how ENA is treated state-wise. What do you make of this decision on ENA? Do you think that alcoholic beverage, especially ENA used for industrial purposes, which are those industries which use ENA quite heavily and it actually impacts their revenues? How would this clarity or this decision, what should industry make out of it?
So, Timsi, first of all, this decision is, of course, good for the liquor industry. And it puts them at par with what was happening before GST. So before GST, what was happening was on purchase of ENA, mostly industry was paying 2% CST because they were issuing free form. And in some cases, of course, if they're buying locally, they would pay VAT as well, but mostly CST of 2%. And then on the output, they were paying VAT and state excise duty. Now under GST, while the output remained the same, there was a confusion that on input or when they purchase this ENA, whether GST will apply or not. And as the finance minister did mention that Allahabad High Court did say that it falls into the purview of GST, that means that the states cannot levy tax on this. And therefore, I'm not very sure, while the center has said that we will not impose GST on this, how will the state be able to levy VAT on this, under what provision, etc.? That's something which perhaps I need clarity, and the clarity would emerge. I think it's difficult for the council to
Finance Minister said that, Pratik?
Yes.
I think Finance Minister said that they are going to cede their right of levying GST for ENA used for human consumption. That is
ENA
why she said that he'll cede that right.
ENA used
But when it comes for industrial purposes, they will continue to levy.
No, that's fine. So center can cede the right, but how will the state get this right back? Because under the constitution, now only alcohol or alcoholic beverage for human consumption is with the state. Other items are not with the state. So how will that work is something which one perhaps needs to understand. But assuming that it works, then I would assume that the states will levy tax in the same manner where they were doing it before GST. And therefore, if the situation doesn't change, I mean, before GST also there were different rates, and now also there will be different rates. And hopefully, in most cases, it will be 2% central sales tax for the industry, which is, again, they would have already been factored in the cost as well. So that does not put them in a more disadvantageous position than what they were before July 1, 2017. In that sense, this decision is good.
Okay, so you still think that there has to be a clarity given in the circulars, or maybe once this decision is notified, that how Centre is going to cede the right and give it to the state when it comes to taxing ENA for human consumption? Probably that clarity, maybe DP Nagendra Kumar, you can help us with that, since you have been there in the thick and thin of how this law works and how this entire quantum of ENA between state and centre is going to work. What do you think should be the best way forward, so that there's absolutely clarity available with the states and the centre? What is to be taxed by the state? What is to be taxed by centre? Where VAT will come into play, where GST will come into play, and best possible, how the industry should read it. Nagendra Kumar.
Yeah, Dempsey, I think this issue with regard to whether ENA should be subject to GST or not had come up in the earlier meetings as well, and the decision was deferred. But one compelling reason would come in the picture will be that for the year 17-18, the due date for issuing notices would have been completed by 30th September. And by 31st of December, some decision will have to be taken on those investigations and the notices issued already, demanding GST on the ENA with 95% purity. ENA could go, as my co-panelists discussed, for both for portable human consumption as well as for industrial use. I think today's decision will bring at least a clarity that ENA for non-industrial purposes, I think it's off the GST. We could discuss about the legality of the whole thing, but I think it's a recommendation of the council, and I think in the interest of what the constitutional amendment has said in 279A, I think harmonious and uniform tax system in India, I think that council decision should be given due weightage. Insofar as the industrial consumption, industrial purposes are concerned, since it is not coming within the portable alcohol category, I think the centre would continue, the GST would continue to apply. I think we will go by that. We will wait for the clarity, but I'm sure, I think since it's a council decision, it's a conscious decision taken because we all know the 95% purity and above is a critical input for manufacture of portable alcohol. And I am sure, I think, as Mani said, since it is outside the scope of GST, I think levying GST and also the VAT would be, I think, certainly not addressing the harmonious principle what the GST system proposes to evolve in the country.
Well, we do hope to see some cooperative federalism on that front. But let me address some of the other issues that were taken up during the GST Council meeting as well. Pratik, let me come back to you on that 28% online gaming GST. The Revenue Secretary has just clarified again, after all of those series of tax notices given to the gaming companies, that it is not really retrospective in nature. These laws already existed, and it's not something new. No law has been tweaked to do so. Do you think we've seen the end of the matter?
Certainly not. We have not seen the end of the matter. We will continue to see the litigation for the past period. What the government is saying is that we have not amended the law retrospectively, but in their view, in their reading, even the earlier law, which was for betting, gambling, and things like game of skill, game of chance, all of that dispute, they felt that it is a game of chance and hence should be liable to 28% right from the beginning. And therefore, the notices have been issued. From 1st of October, the distinction between game of chance and game of skill goes away. The law clearly says that online real gaming where money is involved will be subject to 28% tax on the full value. So there's absolutely no doubt from 1st of October, assuming, of course, all the states do pass the ordinance as was mentioned. But for the prior period, I think industry would have a reasonable case to argue that it should not be 28% on the full value. And particularly there were one or two court decisions in favor of industry as well. And obviously the case is pending before the Supreme Court. So Supreme Court will finally take a view on the matter. And obviously from an industry standpoint, it would have been good if the government would have said it is applicable from 1st of October 23. But obviously that's not the view coming from the government.
Well, that certainly does not seem to be the view coming from the government. Mani, how did you read the comments of the Revenue Secretary reiterating again that this is not retrospective in nature? It doesn't look like the government is going to have a rethink on that 28%.
Look, the legality of the issue, maybe the government may be perfectly right in respect of the legality of the issue. and whether the decision to have all these notices issued from 2017, whether it stands the test of law, whether it stands the test of courts, we'll have to wait and see. I'm sure we are now going in for an extended period of protracted litigation on this, because the amounts that involved are very gigantic, and most of the players involved may not even be having a net worth which is commensurate with the amounts of notices which they have been issued. So the legality of it will take some time to settle down, and we will see a lot of action there. The larger point that I have over here is when there is a clarification that is issued for any business, not only in respect of online gaming, it should ideally be on a prospective basis. It should ideally not be retrospective. Because assuming business has happened in a certain way, even if legally, incorrect, there can be a composition scheme that can be issued to take care of the past liabilities. Because coming one day and saying that, look, there is a large amount of liability that is there is legally correct. I have no doubt in terms of the legality of what they are saying.
Sure.
But the larger issue over here is what is the message that is being sent to the business as a whole?
Sure.
So the business as a whole, if they had some avenue, something like a composition scheme to take care of the past liabilities, I think that would have been greatly appreciated by the industry.
All right. On that note, Mr. Mani, Mr. Pratik Jain, Mr. DP Nagendra Kumar, thank you, gentlemen, very much for sharing your thoughts here. And thank you, Timsy, for taking us through that conversation. On that note, we're going to take a short break, but on the other side, we'll get you